So what does the data actually show us, and what's driving the drop in foreign investment into China?
I think what you're seeing is in a continuation of last year's really weak numbers. We saw there was a record low, it was like about a 30-year low last year in companies putting money into China. And this year you're seeing a continuation of that. Basically, yields obviously are much higher in the US and other developed economies than they are in China. The Chinese central bank is cutting rates now. And so if you're a foreign company, you're looking at a weak Chinese economy, you're looking at growth, it's not even going to be 5% this year, it's only about 5%. And then you look across the Pacific to the US where you can get 5% just for having your money in treasuries, you see a better investment environment. So companies are taking their profits and they're moving them offshore. And then you're also seeing a lot of foreign companies, especially in the car space, are pulling out of China or cutting back their investments in China because they're just not able to compete in the Chinese market against companies like BYD anymore. So you see Mitsubishi pull out, where you saw Honda was cutting back, Nissan is cutting back, Hyundai is cutting back. A lot of the foreign brands which were doing really, really well in China till just a few years ago are now really pulling back on their investments there, and that's also driving driving these numbers and this drop we saw in the second quarter.
James, Chinese firms are also investing overseas at a record pace. So what's driving that?
I think it's the opposite of that. So there's very, very strong Chinese car companies and battery companies, which are really driving this record $71 billion in outbound investment we saw in the second quarter. BYD has opened factories in Thailand, Brazil. It's opening factories in Turkey. It's talking about opening a factory in Hungary. It's opened a factory in Kazakhstan. You've got battery factories that are being opened around the world to supply not only Chinese EVs, but for other companies' EVs as well. You've got Chinese companies building chemical plants in Saudi Arabia and other places. So Chinese companies are going out now in ways they haven't gone out for probably the last 10 years to really try and take advantage of, one, the demand for their goods. Chinese EVs are some of the best in the world. The battery technology is the best in the world. They lead on solar panels. But then also because they're having to build overseas because of higher tariffs. You can't, a lot of the things like EVs, for example, you can't ship from China to the US. The EU has obviously put in tariffs as well. So there's a lot of pressure on Chinese companies to build their factories in Europe or in South America or in America so they can get their goods to customers in those markets.